Welcome to the Insurance Dork channel powered by Customers First Insurance Group. Have you ever wondered why your rates went up, what that coverage actually means, or how to protect your stuff without overpaying? If this sounds like you, you're in the right place. Are you ready to dork out on some insurance? In today's video, we're going to talk about why insurance is not a commodity. No one likes to pay for insurance, and most often just look for the lowest price. To make matters worse, all the big name companies inundate you with ads promising the lowest price, like 15 minutes could save you 15%. But often this mindset will leave you holding a bag at the time of a claim. Insurance is about risk. You pay into a pool with others like you. When bad stuff happens, the pool pays out. Rates are based on real math and real risk, not marketing gimmicks. To lower costs, companies cut in two areas: claims and overhead. That cheap policy may come with stricter rules, less coverage, or hidden exclusions. Online quotes are fast, but fast tech and flashy ads cost money. That money has to come from somewhere. Here's what most people miss. Insurance contracts are not all the same. One word in your policy could be the difference between a paid claim and a denial. That's why working with a good agent matters. We look out for the fine print so you don't get burned later. Bottom line, don't just shop for the cheapest price. Ask, what's covered? What's excluded? How are they handling claims? Because when something goes wrong, you don't want a discount. You want a check. If you found this helpful, do me a favor. Hit that like button. Subscribe to the channel. Turn on the bell so you don't miss the next episode. Got questions? Drop them in the comments. I'd love to hear from you. My name's Mike Varicki with Customers First Insurance Group, a.k.a. the Insurance Dork. Thanks for watching Insurance Dork, where we make sense of insurance without putting you to sleep.